What's up everyone, it's Karthik with MoneyVest. So markets here down slightly about 19-20 basis points. The NASDAQ also very flat on the day here. So this right here was the S&P 500 just trading over 5,700. So pretty much trading near all-time highs. The Dow Jones hitting yet another all-time high of well over 42,000, and the NASDAQ here down about 30 basis points on the day. So very flat day in the markets. And so far, for the month of September, the S&P 500 is up almost 1%. So we are back in the positive territory going into the last trading week of September here. It's going to really come down to the last 5 days whether the markets can maintain these gains higher or not. The NASDAQ, however, is up over 1.3%, very close to its all-time highs right now, sitting well over 18,600 is the level that it needs to break out of. There's a few different things I want to discuss today. The MoneyVest Index is back over 4. I gave you guys this warning in the beginning of September, end of August. We talked about how this is a level which definitely warrants caution and something that we need to be alert of, and we were trading well over 4.05, and then of course what did we witness? We saw a 5% pullback in the S&P 500 as this entire MoneyVest Index came down. Volatility did spike back above 25 to closer to 30 levels. So this right here was the 23, 22 levels that we spiked back to, and then of course since then we have come back down to 16 as the MoneyVest Index also has rotated back up to where we are now at well over 4.06. So lots to discuss in this market update. Make sure that you drop a like and subscribe to the channel, and all I'm asking in return is that you share this video with your friends and family and other traders, investors that can benefit from this information as well. And I also want to go over my options portfolio. The first 4 weeks are officially over since I've been sharing this on our Patreon. And this right here is the performance for the options portfolio relative to the S&P 500. The portfolio is up a nice 4% so far, with the S&P 500's return of 1.21%. So we are doing well. Again, if you want to get access to all the alerts, everything, what I'm buying, what I'm selling, what I'm trading, the entire portfolio, link's going to be down below if you want to join. There is a 16% annual discount that you can access until the end of this month, and I will be sending out updates for week 4 to all the community members later this week. So pretty much this weekend, I will be sending out updates, but this is where we are, just showing you guys here on YouTube so that you can get encouraged about what is possible when it comes to trading options the right way. So we're optimizing a very disciplined approach to trading options, to selling them, running the wheel strategy. And the options portfolio for myself is up over 30% year to date. S&P 500 is up a little bit over 20%. And then if you take a look at the beta, I calculated the beta here for the portfolio, which is essentially calculating the volatility of the portfolio, incredibly low, right? So we're looking at 0.2478 in the beta relative to the S&P 500. So what I'm able to really target or achieve is a higher rate of return. In other words, outperformance on the return side with a lot less risk. And that's the whole idea, right? I really don't want to see a lot of volatility in the portfolio. I want to see more consistent, more stable gains with an acceptable level of risk. I'm not looking for a lot of volatility while also generating some decent returns against the S&P 500. So again, link's going to be down below if you want to join. We'd love to have you on board. Now coming over to the update. So this right here is the indicators that we're keeping track of on a recession basis. I broke this down in my yesterday's video in a lot more detail. But as I mentioned before, the 50 basis point rate cut in a short-term basis tends to be very bullish, and that's exactly what we witnessed yesterday with a massive rally, new all-time highs for S&P 500 and the Dow Jones, and the NASDAQ also pushing up over 3%. So very strong momentum coming in for a lot of individual stocks, including the Magnificent Seven. However, I really want to draw your attention to some of the normal / relatively weak / indicators that if they worsen further, then of course we're going to be in a much bigger problem related to recession, which we already know if the markets are in a recession, earnings eventually get hurt, and that's when the multiples will compress, and it's not going to be a good situation. However, if you are a long-term investor, it's going to be the best situation for you because you're going to be ready to buy those discounts. More coupons, more deals are going to be coming in, and if Christmas comes in early, we're going to be ready for those deals, for those bargains. That's what we have tried to convey on this channel as a message is that every dip, every pullback, every correction is a good long-term buying opportunity for investors. So one of the most famous quotes at MoneyVest is when the VIX is high, it's time to buy. And right now the VIX is low, so it's time to go. In other words, it's time to remain cautious and alert with where we are in the markets, not to mention the MoneyVest index now curling back above 4, which historically, as we have discussed before, has not been the best time to deploying capital, because this right here, when it was at well over 4.2, slowly and steadily making its way lower. This right here was the last time it traded up to 4.2, and of course sold off all the way down to these levels. This right here was back at 3.98, came down. This right here was back at 4.14, came all the way down here. This was the August 5th carry trade blow up. This right here was the September warning that I gave you guys, and of course we had a 5% pullback, and this is where we are once again. And of course, this right here, July of 2023, sold off quite aggressively, pretty much came down to 2.34. And I really don't have to, go over the S&P 500. This is like aligned really, really well. This is a risk reward chart that I like to look at on a very, very regular basis. So if you come over here, this is the S&P 500 at the bottom. And if we are looking at the weekly chart, for example, so if you go back to July 2023, that's going to be, that's going to be somewhere around here. That's going to be, June, July, right here. So this is where we are. So this is June, July 2023, right about there. And that's going to be the chart right there. So that's July 2023. Came all the way down. Where did we found a bottom? October of 2023. And this right here is October of 2023. What was the pullback? Let's take a look. We were down a little bit over 11%. So that was a nice little correction in the S&P 500. Then, of course, we boomed all the way up to as much as December 2023. So let's take a look where we are. Let's go over to the daily chart very quickly so we can figure out those dates. Okay, so December 2023 was right about here. Very small pullback, very small dip here. So this right here was a dip of about 2.29%. And of course, boomed even further all the way to March of 2024. So this right here was all the way going into March of 2024. So we kind of stayed up there in the range of 3.6 to 4. So this entire time you're seeing this market rally here. So this right here, the entire time we're seeing that market rally, the MoneyVest index is sitting right above there. It's somewhere between 3.7 to as much as 4.2. That's where it ends up trading at. And this right here is the drop. And that happened in March 24 all the way through April 24. So March 24 all the way through April 24. So this right here is the sell-off. This right here is the July pullback, which is going to be right about there. And this right here is the September. That's that right there. And then this is where we are once again at well over 4. Not saying that, this is an immediate reaction. The markets are going to start rolling over now. And, this is it. We're overbought. We're overextended. Get ready to see a sell-off. Nothing like that. We can stay overbought longer than markets can remain rational, right? So in other words, markets can remain irrational longer than you can remain solvent. So markets can actually remain irrational far longer. So in other words, we can stay at these overbought levels and the MoneyVest index can stay above 4 for a long time. It just from a risk reward standpoint, for me, myself, it doesn't make a lot of sense to be deploying a lot of capital into the market given how poorly the structure the risk reward is at the moment. So just keep in mind, and if you come over to a lot of individual stocks moving back above their moving averages, so this has been a little bit of a broad-based rally as a lot of sectors continue to participate. However, if you come over to the sector chart and take a look at what was actually moving today, technology was not the one. Right? So we are back into utilities. So we're back being a little bit more defensive in the market. Staples are back up over 0.5% and everything else was down. I think this is, again, one of the ways the markets are sending a very clear message. This is a very clear message in liquidity and what's actually happening. You can come over to our MoneyVest website as well. Take a look. $87 billion drawdown. Mag 7 was down about $60 billion. Big 3 were down $82 billion. Top 10 were down $46 billion. And again, some of the big companies that lost market share today, Nvidia, $46 billion, Microsoft, $25 billion, Tesla, almost $20 billion, FedEx obviously dropping quite a bit, 15% on the day. They reported earnings, an $11.3 billion loss. And which were the companies that actually saw gains? We did have Amazon and Google because of their size, but in terms of percentages, let's come over here. We got Vistra, we got CrowdStrike, Nike, Supermicro, Public Service, Norwegian, Intel, then we have Constellation Energy. So if you come over to utilities here, and if we select just utilities, take a look, $32 billion change in the positive direction, 2.7% for market cap addition for utilities, 31 stocks here. If you come take a look at staples, so if we go over consumer staples, so consumer products, you'll notice another 19 basis point increase, or just over $1.7 billion. So again, on the charts here, staples and utilities, the only two sectors pushing higher. Utilities over 2.6%, and XLK was down almost 0.5%. Materials, industrials, healthcare, even the bond market was down over 38 basis points for TLT. And let's take a look at gold and how was gold doing here on the day. Look at that, new all-time high, right? $2,600 an ounce. We're trading at well over 1.3% higher on the day. So on a day where utilities and gold is pushing higher, I really don't know what else could be a huge signal for the markets. I mean, you tell me. Fed 50 basis point rate cut. The economy is weakening, as we already know, and the market's positioning is going towards utilities and gold. So those are the two areas in the market. Those are the two asset classes, I should rather say, that the markets are moving towards, right? So isn't that a very, very defensive positioning in the market? That is a very, very defensive positioning, and more often than not, that doesn't lead to us not having a recession, right? So markets really are still expecting for a bit of a hard landing in the economy moving forward, and that's why they're kind of flocking a little bit more towards gold and utilities. So again, it's all numbers, it's all in front of you. I'm not making anything up. Volatility is back down. MoneyVest index is back above 4. So I'm going to be very, very careful, very cautious going into next week. And look, it really comes down to having a very disciplined approach to investing and trading. You have to stick to your plan, trust the process. There's always going to be shiny items elsewhere. There's always going to be the next big thing that you can chase after, or you can trust the process. You can stick to your plan and continue to hit those base hits, right? Base hits. If you try to hit a home run, there's a higher probability that you get strike out. But if you are consistent, if you stay in the game, if you're disciplined enough, base hits, and this is the performance that we're targeting, right? Consistent growth here over longer time frames, with very, very disciplined and level-headed investing and trading strategies. So that's where we are. Keep in mind with where the MoneyVest index is, majority of stocks trading back above those moving averages. Volatility is back lower. And if you come over to some individual stocks, Tesla here struggling a little bit. Took a new trade for next week, so sent out all the alerts in the Discord. But Tesla here now back in that support, and we talked about this in my most recent video where this right here was a huge breakout. So it's possible that Tesla trades back down a little bit lower, validates that support before making that next leg up higher. Before or around the Robotaxi event, my price target's going to stay put at $267, $270 for Tesla moving forward. Talking about the S&P 500, so on the 30-minute time frame, we're still, again, flat on the day, so continues to trade above that 5665, 5700 level, so that's very good to see. And QQQs on the day here, once again, down about 19-20 basis points. Resistance going to stay put all up to 487, and support level down here 477 for QQQs. So we're still a little bit of ways from all-time highs, but resistance going to stay put at $487 for the NASDAQ. Coming over to Apple stock, and Apple here dropping a little bit. It was green. It was actually very green at one point during the day. It was pushing up to $233. So if you come over to the 30-minute time frame, last 30 minutes, that was quite an aggressive sell-off of about 1.5%. So 1.5% sell-off towards the last 30 minutes for Apple stock here, and pushing it back down to 30 basis points lower on the day. So the daily candle definitely looks very interesting, with lots of sellers stepping in with that longer wick to the upside. Support level is going to stay up right about here inside this green rectangle, sitting roughly in the 270s, 217s. Amazon, for example, breaking out a little bit here. Support level is going to stay put right about at 189, 190, and the next target is going to be all up to $201 per share. Amazon still pushing higher. One of the few, Magnificent Seven companies that were green on the day, along with Google and Meta. Meta hitting a new all-time high at 561. Google also pushing higher, considering how oversold it was, and Amazon was, again, one of the three that were pushing higher on the day here. Support level is going to stay put at 189. Resistance and targets back up to $201. Tesla, we've already discussed. Coming over to NVIDIA. Been trading NVIDIA for 4 weeks now, so all the returns that you really see here are all off of NVIDIA's volatility. And so, it's done really well in the last 4 weeks here just really been consolidating sideways. I mean, we did witness, of course, this massive sell-off down to $100 per share, then back up to as much as 121, and it's really just been trading sideways in that range, not able to break up of 118. And you can see for the last 4 or 5 days, it's just not able to break above this level of resistance at $118. So that is going to be a very, very important level that I'm watching going into next week as well. And support level, of course, down to $101, down to as low as $96 per share. I have a feeling that NVIDIA may trade down to low 100s again. And again, so we'll find out what happens next week. But there's still a lot of lower highs that are being formed for NVIDIA. So there's definitely a lot of weakness for the stock right now in terms of price action. Advanced micro devices, resistance is going to stay put at 162. So that right there is going to be that target. Support level stays put right about here, $141 per share for advanced micro devices as well. Going over to PayPal, I believe PayPal continued its outperformance, down about 1% right now, but this week, PayPal's up 9.5%, so that is a lot of outperformance compared to the S&P and the NASDAQ. So very, very nice breakout coming in from PayPal, and support level is going to stay put at $74, and the next target and resistance pretty much at $88 for PayPal as well. Visa was struggling a little bit. Without a doubt, continues to pull back, just been overbought and overextended for quite a few days. And resistance is going to stay put at 290. Support level is going to stay put down to $282 for Visa as well. Just a massive run-up that we have experienced for Visa from its 250s all the way up to 292 for the company as well. Talking a little bit about Microsoft. Actually, before we get into Microsoft, let's talk about Meta platforms. And Meta here hitting a new all-time high, $564. Very nice breakout after getting rejected there twice. And yesterday, up almost 4%. On the day, up over 40 basis points. And support level is going to stay put at $541. So this right here is going to be turned into a support now for Meta. And so again, congratulations. It's still one of those companies that, we talked about a couple of years ago. I still remember that live stream, the brutal live stream on Meta when it was trading down to $80, $90 a share. Everybody in the live stream, most people I should say, were extremely bearish, saying that Meta is a dead company who even uses Facebook, and it's dead. It's going to be done for in the next few years, and well, here we go, 400-500% higher from those levels, and just a massive recovery that we've seen for Meta platforms. So congratulations to everyone who stood by, seeing the value when nobody else was, when majority of the people weren't, and of course you have profited immensely. So again, huge congratulations to every Meta investor and trader. And again, 2 years ago it was just a really bad time when we were talking about that stock. Anyway, coming over to Netflix, and Netflix here also consolidating sideways. Support level is going to step it down to 662. We're just really in that range where we continue to trade a little bit sideways here, with again the resistance going to stay put at $700, support level down to 662, 665 for Netflix moving forward. Talking about Google, and Google again continues to move higher a little bit, coming up to that area of resistance. So this right here is going to be that area of supply and resistance for Google, and support level sitting roughly at $153. And then finally coming over to Microsoft, starting to roll over just a little bit. Support level is going to stay put down to $432. Resistance and targets all the way to $468 for Microsoft as well. And then finally coming over to Enphase and Costco. Enphase selling off once again down over 2%. Resistance, as we discussed, at $124 for Enphase, and support level all the way down to as low as $97 inside this green rectangle for Enphase. And then finally coming over to Costco. On the day, Costco was pushing higher, up almost 70 basis points. Again, it's kind of seen as a recession-proof stock. The reason being it's one of the biggest retailers. How did Walmart do today? Let's take a quick look. And Walmart was also up 1.3%. So again, Walmart, Costco, you might even consider Amazon as one of those trades which was pushing higher on the back of, once again, markets becoming defensive, right? That's the whole idea because all the numbers, all the stats, everything is in front of you. You can make sense of it however you want. But on the day, what did we get? We had 9 out of the 11 sectors in the S&P 500 red. We had the only 2 sectors pushing higher, which were very, very recession-proof. Those are defensive sectors, utilities and staples. Both of those things are necessities. You need that in a time of recession. What else pushed higher? Gold, right? Gold, again, is seen as a huge hedge against recession, inflationary pressures, and that's, again, one of the biggest wild cards. What if, with that jumbo cut of 50 basis points, what if inflation starts moving back higher? So in my opinion, it's too soon. It's too early to call this 50 basis point cut a huge success. Yes, the markets did have that initial reaction of pushing higher. We had that huge burst into stocks momentum coming in with new all-time highs. But it's, again, too soon, too early to call this a huge victory, a huge decision, because the effects of what's already in play and what's going to be in play are only going to be seen over the next coming months. With as more data points continue to come out, we're going to find out exactly what the true reality is for the US economy. And I can tell you right now, from one of the indicators that I'm looking at, from a lot of the indicators that we are tracking on a regular basis, it looks not that great. I hope this picture improves. I really hope that, the economy does not go into a recession and we don't really experience high levels of unemployment, because that's really going to be painful for a lot of households. But at the same time, that's what the data is showing us. From an investor standpoint, of course, that's going to be a buying opportunity. There's going to be a lot of deals as asset prices come down. So you better be ready with your cash, with your shopping list, with what you want to buy, where you want to buy it, with high quality names, whether it's real estate or stocks or individual asset classes, other things. You definitely need to have a shopping list ready as an investor, so you can pounce on those opportunities when they present themselves. But of course, from a consumer, from a human standpoint, I really don't want, of course, the economy to tip into a recession. But at the same time, we're going to find out very soon. The only concern I have is not so much for a recession, really, because a recession can still be managed with lower interest rates, and the Federal Reserve can continue to cut. That's what they've indicated, and they can be more aggressive with those rate cuts. My bigger concern is inflation, because if that starts accelerating back up, right, we're at 2.5%. If that starts to go up to 2.7, 2.9, 3, post 3, 3.5, 4, if that starts moving up, I really think the Federal Reserve will have to make some very, very hard decisions. They're going to be stuck between a rock and a hard place. And again, that, nobody knows the answer to that question. Like, what are they going to do? Are they going to raise rates? Are they going to cut rates? And the last thing, as I said, the last thing the Federal Reserve wants is for inflation to move higher while unemployment is moving higher. Because if both of those things move higher, that's the worst case scenario for the market, for the Fed, for the economy. And that's what we're trying to avoid. And that's what I'm trying to share here with all of you so that you're prepared. So I hope you all enjoyed this video and found it helpful. Let me know your thoughts down in the comment section below. Be mindful of where the volatility is, where the MoneyVest index is, where individual stocks are, and where the liquidity went to. This was a very risk-off day where markets it's also Friday, so it makes kind of sense why there's not a lot of volume also on a lot of these trades, except for, of course, staples and utilities definitely did witness a lot of volume, but it was quite a significant rotation. And we also did have triple witching. So, we did have the T-vol index, I'm assuming, spiked quite aggressively. So there we go, 285% increase on the T-vol because of I think it was a triple witching a day with a lot of options futures expiring on the same day. So, 285% spike in the volume here in the New York Stock Exchange because of all these options expiring. So a lot of the volumes were higher, and it's also Friday, so keep those things intact and in mind. But yeah, over the weekend I'll be sending out more updates for all the members. If you want to join, link's gonna be down below. Would love to have you on board. As always, make sure that you drop a like, subscribe to the channel, and 16% annual discount that's available until the end of this month. Happy investing. I'll see you all in the next video.